All right, so kind of in summary, we talked about we had that stick figure, and you can save more in a place that you can grow the rest of your life. You can use it throughout your life, whether it's in retirement, investing in your business, regardless of what that is. We just did the video on the power of retirement and how, regardless of what strategy you're hoping to use, I'm a firm believer that having a permanent whole life insurance contract that's set up well can help serve you in amazing ways in that. But now we're going to talk about protecting the most important asset, which is yourself. And there's kind of a protection aspect, but then there's also a legacy and kind of an inheritance aspect to this video. So the first thing is I want to uncover kind of what human life value means. And human life value is essentially this. It's looking at an individual and saying, what is their earning potential over a 10, 15, 20, 30, 40 year time period. For example, when we work with someone, you can't get more life insurance than what you're worth. Okay, what essentially insurance companies don't want you to be incentivized to kill yourself. As messed up as that sounds, you can't be worth more dead than alive. And so one of the things that they want to do is they want to justify that. So we have to look at how much money you make. We have to look at your assets, but then we also have to use our head. For instance, when I convinced the insurance company that I was worth $10 million bucks. Before I was worth $10 million bucks. But in that letter that I wrote with them, and I actually did a creative video to them as well, I explained to them what we were doing. I explained to them why I wanted the insurance, and I explained to them why it would be worth way more than $10 million in the future. And for that, they were like, okay, we're gonna allow that. So that's an example of human life value. When people work with us, I feel very strongly to make sure that we're not devaluing the most important asset. Now, maybe you need $3 million worth of life insurance, and it doesn't make sense to set up a permanent plan like that because it wouldn't be efficient. But we're always going to give you the option to get up to a human life value because we don't want to devalue or underinsure the most important asset. We don't underinsure our house. We don't underinsure our cars. Let's make sure that we don't underinsure our ability to provide income. So that's like the traditional way to talk about life insurance, and I do actually agree with that. I want people to make sure that they're protected. But now let's talk about you using this plan. And every single year, if you look at the illustration, your plan is going to increase. Your death benefit is going to permanently increase every single year. Why is that? Because as your cash value grows and we want to make this tax-free, it has to grow. Okay? So think about the power of this. You don't necessarily care about the death benefit until the day that you die. You care about the cash. So every year we're maximizing the cash and your death benefit's growing. So when you're most likely to die, whenever that is, 20 years down the road, 30 years down the road, maybe 60 years down the road, your death benefit's going to be the greatest it's ever been. And so that's really powerful. And then the next thing is that money will get passed down income tax free. Now, that's really, really powerful as well, because when you look at families like the Rockefeller family and you look at generational wealth, not only are you able to, save that money and use it and have that money grow and it be great in retirement, but you're going to most efficiently pass on assets to the next generation, where the government won't be able to interfere as far as taxation. Now, there are certain estate strategies, and if you have over 22 million at the time of this recording, maybe 11 million, regardless of where the estate plan rules are when you're watching this video, you may have to do some trust work and work with attorneys as it relates to making it where you don't have to pay estate taxes. But as far as passing on your money of tax efficiently, life insurance is the greatest place for that. And typically, no one will argue with that. Most people that may have never heard of the strategies that I've talked with permanent life insurance, but everyone in the financial planning world will agree that life insurance is the most efficient way to pass on your money. And all I'm saying is it's a powerful, powerful piece of making sure what you want to happen will happen even if you don't live there. And it's a powerful strategy and asset to pass on to the next generation, whether you want to pass it on to your family, whether you want to pass it on to an organization that you care a lot about, or regardless of what you want to do with that money. It's powerful to think with the end in mind.